Right. We're looking at another past paper question now that we've completed all of our content for partnership accounting. This question I believe is from 2007, paper 2. Yep, 2007, paper 2. Right. So we will discuss it and then I'll give you opportunity to try to work it out on your own. The first thing is to list 3 distinguishing features of a partnership concern. Basically, what they're asking you for here is to list 3 characteristics of a partnership concern. All right, that you would have in our notes. You could pull it directly from there. You're talking about in terms of one, it not being incorporated and having unlimited liability. 2, you could discuss things like the partnership agreement and what it entails in terms of determining the capital to be contributed, things like the share profit ratio, interest on capital, interest on drawings, right? Another distinguishing feature is it can raise more capital than that of a sole trader. It helps with specialization and division of responsibilities. So some partners could focus on certain areas, right? So you have shared responsibility. You could talk about the slower decision making because now you have to get the input of everybody, right? It's binding in the sense that if one partner does something that is detrimental to the business, it kind of affects everybody else. So along those lines, right? Any 3 could work. So this is Skeritt and Cymbal, right? They're in partnership sharing profits and losses in the ratio of their capital balances. So we did see an example of that when we have partners sharing capital in the ratio of their capital balances. You're going to be using these balances here. You get more disappearing pen. Right? So it's basically a 3-to-4 ratio. Right? 3-to-4. You can get rid of all these zeros. Right? So in your working, remember you want to head up working and you want to itemize things as you go through this question. So this is one you'll definitely do. Right? You'll talk about your P&L ratio, your profit and loss sharing ratio. And you could say here that's going to be 3-to-4. And that's the Skeritt and Cymbal. Right? So you write Skeritt and Cymbal and you say 3 sevens and 4 sevens. So you're getting that 7 by adding the 2 parts together. Right? The following balances were left over in the books after the preparation of the trade and profit and loss account on September 30th. Right? We have capital account balances, we have current account balances. Skeritt is in on negative, so this is our debit balance wrote down, right? Remember that, that'll be on debit side. Cymbal is good. They have drawings 12,000 and 5,000 for the year. There's a motor vehicle at cost, a building at cost, so prepare yourself for depreciation. Debtors 23,300, creditors 17,000. Stock at the 30th of September 2006. So this is our closing inventory here. Cash at bank. Additional information to be taken into consideration. So they gave us the net profit, so it means that we don't need to do the trading part of the account. We have a net profit we could start from. Each partner earns a salary of 20,000. So that's something else you want to make a note of here. Salary, right? Skeritt, Cymbal, both of them earning a salary of 60 grand. Right? And we know where this is going to go in our appropriation account. Interest on capital, 5% per annum. Right? That's something you'd want to work out. Right? So you put Skeritt, Cymbal, you take their capital account balances, like so. And you work it out one time. Right? So that's what I mean by working. Now I just doing some brief jottings, right? You will do all your working as you go through the question. Interest on drawings, that's another point for working. So you do the same thing as I did for interest on capital. You write interest on drawings, you put the rate of interest that they're going to be charged, and then you write and work it out one time. Skeritt drew cash on the 31st of October. Remember I taught you to do this? So that means October, you're checking from November, December. Right? So this is 2 out of 12 months. Just remember that. And Cymbal drew cash on the 31st of March. So you're checking April, May, June, July, August, September, October, November, December. 9 months. So this one is 9 on 12. Right? So you're doing 2 12s and 9 12s. Right? Remember how you do that? The rate is 10% per annum. Right? And then you'll find 10% of the total drawings. And then you multiply it by the 2 12s and the 9 12s so that you get it just for that period. Because when we find 10% on the entire amount of 12,000, that's for a whole year. Follow? So you want to find 10% on the 12,000, but then multiplied by 2 over 12. Understand? You're okay with that, right? Right, they give us accumulated depreciation on the 30th of December is this. Remember, we have net profit. So this figure is ready for the balance sheet. Right? In the balance sheet, you'll use that, and we look at the balance sheet together as well. What you all are going to be doing for me is you're going to do parts 1 and 2, right? Because we have some experience doing the profit and loss appropriation account as well as the current account. We have not done a balance sheet together as yet, so that's what we will do together today. So I will do the balance sheet for you or with you. All right? Everybody clear on the activity? So remember, you want to head up your working, number it, read the question over again, and take out the information that you need and put it into your working. So that way, as you start to do the actual profit and loss appropriation account now, you just look to your reference your working and you pull your figures out of there. All right, everybody okay with that?
Yes, sir.
Yeah? Carry, all right. Diana, Solano?
Yes, sir.
All right, so you're working on this for me and then we will correct. Yeah? A good approach that we could take. It's a good approach you could take when you're gonna do a partnership question, right? Let's break it up into some of the requirements you'd usually have. So in our partnership question, we just put this as things to consider for partnership questions. You might want to take a note of this, right? So this more pertains to the working, right? So when we're looking at working, like working all the figures, that's what I mean, right? Usually I have we could talk about, let's look at what happens in the appropriation account. In the appropriation account, right? 1. Now, not all questions is going to require to look at these things, right? But I'm just thinking broadly here, general, in terms of what a question could ask. Well, first thing you need with the appropriation account is your net profit. So you should always ask yourself or look for, are there any adjustments? Right? Example, interest not yet paid. Remember we saw that once, which are interest on loans not yet paid, right? Or any other adjustments, overstatements. Sometimes we overstate our expense or revenue or income, right? Understatements, stuff like that, right? Adjusting entries pretty much. Then when we move away from the net profit, usually we need to be able to calculate interest on drawings. Right, interest on drawings. Here we need to look at what's the rate per annum, right? Example, if it's 5%, 10%, right, per annum. Here we could also look at the date when drawings were made. In this question, let's say we have $5,000 drawings made 31st of March 2009, right? And the interest on drawings is 10%. Then our calculation is gonna be $5,000 because that's the drawing multiplied by 10%, right? So 10% is 0.10 multiplied by, if it's on March, it's not whole year. So we check April, May, June, July, August, September, October, November, December. That's 9 months that we have to check for, right? 9 months. Right? April to December, 9 months. Right? So we work this out, right? Whatever that is. Excuse me. Right? So that's interest on drawings. Other than interest on drawings, and remember this is added to net profit. Right? NP's net profit. The other thing we need to think about is interest on capital. And this is straightforward. This is just the percentage So as you do your working or you read your question, you're looking for information for these things, right? Oh. No, just for another. Right, find percentage on each example. Interest on capital is 5%. P dot A is per annum. And I just say C has 40,000 in capital. And S has 60,000. Then we're going to do 5% by 40,000. 5% by 60,000. And we'll go to whatever that is. Now this is subtracted from net profit. Other consideration is salaries. And this is just subtracted from your net profit as well. And then next thing is profits or loss sharing ratio. Right here, if not, oops. Find it. Example, they may say profits and losses shared in same ratio as capital. So let's say C has 40,000 and S has 60,000. then profit and loss ratio is 4 to 6, and we could reduce this, or 2 to 3. Right? How we reduce it? 4/6, 2, 3. Right? We prefer to use this one, the simpler the ratios. Also, you want to convert the ratio to fractions by 1, adding numbers together to determine the denominator. Example, 2 to 3 is equal to 2 plus 3, which is 5. So parts are 2/5 and 3/5. Right? Use these to calculate share of profits. Example, let's say the appropriated net profit is $10,000. Then we could say C gets 2/5 and S gets 3/5 of 10,000. Right, so you multiply 2/5 multiplied by 10,000 and 3/5 multiplied by 10,000. Right, that should go to be $4,000 and $6,000. Yeah, and generally speaking, these are the main things that you're looking for when we considering or working for the partnership. Let's go back to our question and see if we could highlight those things. So Skeritt and Cymbal are sharing profits and losses in the ratio of their capital. Right, so 1 was P&L ratio. Right, and Skeritt and Cymbal was 30,000 and 40,000 as the capital. So your P&L is ratio is 3 to 4. Total parts for a denominator is 3 plus 4, which is 7. So the P&L ratio S and C is going to be 3/7 and 4/7. So that's what I get from that line alone. So you put that in your working one time. You okay with that? The carry? Right. Next, we have all of these balances here. Capital account, current account, drawings. Right. I might just make a note on this here and write that this balance is balance on the debit side. Right. Additional information, net profit. Right. So no appropriation, no adjustment here. Just using that as is. Salaries, so you might want to make a note of that. So you'll come here and you'll talk about salaries. Remember, we say that's something to consider. Right? Interest on capital is another thing to consider. So you need to work those out. Interest on drawings is something else that I need to consider. So you need to work that out. Right? Don't forget what I tell you with the adjusting it for the amount of months. This is a balance sheet item, so this is not going to affect. It's not going to affect our appropriation account. Let me just do something there quickly further, Kyrie. download. Right, so I just type on the whiteboard. I send it in the group chat for you, right? So you could use that as a little guide, to help you in terms of setting up for a partnership question. Right? You consider those things as you begin to reach the question, as you begin to frame your working for the question. All right. So think about net profit. Do I need to make any adjustments there? After net profit, the next thing in my appropriation account is the drawings. I need to work out what interest on drawings is. Then I need to work out interest on capital. I need to work for my salaries. I need to know what the profit and loss sharing ratio is. So when I read the question, I'm looking for these things, right? And then everything would start to fall into place. As you go through the question, you tick off what you use. And you would see when you have things remaining, you'd be like, all right, I didn't use this. They leave this note here. I didn't use this. Why I didn't use this? Where is this missing from? And that's how you're going to approach the questions. Follow? Is it a bit clearer to everybody now? So you have 4 things there based on what we looked at that I need to work out. The P&L ratio, make note of your salary, your interest on capital, your interest on drawings, and that should give you a nice foundation to work with, or a starting point for your profit and loss appropriation account. Sounds good? Yeah. So you're gonna break it up. You're gonna do the working first, then you're gonna write up the profit and loss appropriation account, then you're gonna draw up the current account. Yeah? Everybody can handle that? Right, so we're looking at the working. So we said that we're beginning with the profit and loss sharing ratio, same as the capital contributions, right? Now the working is not in any particular format or order. I'm just doing it based on how information is provided in the question. So the first thing that I saw was the profit and loss sharing ratio up here. Right, same thing as the capital balances. Capital balances is Skeritt and Cymbal was 30,000 and 40,000. Right, this was the capital. So the ratio, if we put that as 3:4, is our P&L ratio, profit and loss sharing ratio. Right, so we know that's our profit and loss sharing ratio. Right, next thing was, we know the net profit is $250,000. I take a note of that. Each partner owns an annual salary of 60,000. So I could put here salary, right? C and S, 60,000. Right, so we're looking for items that has to pertain to or relates to our appropriation account. Interest on capital is paid at the rate of 5% per annum. Right, so we're gonna head that up. Interest on capital here. Right, Skeritt and Cymbal. Right, the capital for Skeritt is 30,000. How much you say it is? What percentage? 5%. So I just put a dash and put 5% per annum, so I don't forget. And this other guy is 40,000. Right, multiply by 5%. Multiply by 5%. Right, this will be 1,500. 10% would be 3,000. So 5% will be 1,500. 4,000. 5% will be 2,000. Right. Next we have so notice as I do them, I'm ticking them off, right? Interest on drawings, 10%. And that's 10% per annum. Now, Skeritt drew on October 1st. So Skeritt, October 31st, 2005. So we're looking at the months of November to December, right? So 2 out of 12 months. And Cymbal, was March 31st. We're talking about April to December. So that is 9 out of 12. If we're thinking about in terms of years, out of the entire year, right? So remember, it's 10% per annum, but they didn't draw for entire year. And the amount of drawings was $12,000 for Skeritt, $5,000 for Cymbal. So this is 12,000. And here's 5,000. Right, so calculation for this guy is gonna be $12,000 multiplied by 10% multiplied by 212. And underneath here is gonna be 5,000 multiplied by 10% multiplied by 9 on 12. Right? Calculate. So here 12,000 by 0.1 multiplied by 2 and by 12. $200. Right, and then 5,000 by 12 multiplied by 0.1 multiplied by 5,000. 375. Yeah, you got those figures? And that's our interest on drawings. So accumulated depreciation, I'm not going to go in our appropriation account. That would have been part of the net profit calculation from before. So we are going to do part 1, which is the profit and loss appropriation account. Right, let's go look at that now. So this is the actual working. So we say here, Skeritt, Cymbal, say appropriation, account for and then 30th of September 2006. So remember the format for your appropriation account, simple. We go with net profit. So that we need to add interest on drawings. I'm just going to draft up everything first, right? And we have the Skeritt and Cymbal. Then we have to subtract interest on capital, Skeritt and Cymbal. We also have salaries, less salaries, Skeritt and Cymbal. So let's drop in those figures. Net profit was 250,000. So I'm on 3 columns. 1, 2, 3. 250,000. Right? Interest on drawings, right? This is the good thing about doing your working. We have 200 for Skeritt, 375 for Cyril. 200 375. And that together, that's 575. We have 250,575. Interest on capital. You have 1,500 and 2,000. Right, 1,500, 2,000. Sure, you could put this in second column and just total it right there. Right, salaries they said was 60,000 each per annum. Right, 60,000 each. So we do use the first column is 60,000, another 60,000. And then we just bring the total figure across. 6 and 6 is 120,000. Right, and then the total amount we're going to subtract because we're taking these things away from our net profit is going to be 123,500. So we remain with a 75, a 0, 10 take away 3 is going to give us 7, 4 take away 2 is going to give us 2, and 2 take away 1 is going to give us 1. 127,075. Share profits. Skeritt and Cymbal. They was doing it in the ratio of the capital, and we said it's a 3-to-4 ratio. So a 3-to-4 ratio, if we add those two together, 3 plus 4 is 7. So this guy's getting 3 7s, and this person's getting 4 7s of this 127.75. Right, of 127.75. Right, just worked out quickly for you. After we find these figures, we're going to just gonna write it here. 127,075 multiplied by 3. Divided by 7. Put these here. I got a little decimal, but that's okay because I had to add them back together anyway. One, 2, 7. Right, and when we add them together, you're gonna add back up to the same figure that you had here. And you balance your account like that. You all okay with that? Yeah?
Yes, sir.
All right. You all got to that point?
Yes, sir, but I haven't finished the current account.
Okay, that's all right. That's all right. I would leave that for you guys to finish up from a homework. The car you got through now? Dana, how about you?
Yes, sir.
Yeah? The car you all right with it
Yes, sir.
now? All right, nice. All right, guys. So we're gonna wrap up with that because we have to head across the maths.